people need to understand that this breakout is more a technical breakout than any other of their kind. I do believe that it's more likely than not that the gold price goes much higher. Steve, I recall saying on your own show when people were asking when the gold price was going to move, that the move began in the year 2000, that the gold price then was $253 an ounce. Now it's over $3,000 an ounce. So the move that people are talking about has partially occurred. I think gold probably, not definitely, but probably goes not merely higher, but much higher. The reason I say that is because I think we're in for 10 years of deteriorating purchasing power of the US dollar.
Classroom Plus, this is Steve Barton, and thank you for tuning in. Today we'll be taking your questions and asking Rick himself. If you're watching on YouTube, Twitter, or any other outlet, we're going to be pulling the questions from the Rule Classroom Plus. So head over there using the links down below or go to ruleclassroom.com. You can try out the classroom for my favorite price. It's free. And for more serious investors, you can join us in the Rule Classroom Plus. You can try that one out free for 2 months with no obligation, cancel anytime and owe nothing. We would love to have you. And Rick, how are you today, sir? Good to see you.
Very well, thank you. I'm remote from the Bay Area in California, where I will be for the next sort of 6 weeks. So if the location behind me looks different, it's because it is. I'm in a very nice Airbnb, enjoying fine Central California weather.
Okay, right on. A little better than the rain up north, I guess.
So true.
Yes. Okay. Do you have anything that you'd like to talk about to kick off?
I have a couple things I'd like to kick the conversation off with, maybe three. The first is there's a lot of noise about the gold price going through $3,000. I have two comments on that. We're at all-time highs only in the context of the nominal, not the real gold price. And so people need to understand that this breakout is more a technical breakout than any other of their kind. I do believe that it's more likely than not that the gold price goes much higher. Steve, I recall saying on your own show when people were asking when the gold price was going to move, that the move began in the year 2000, that the gold price then was $253 an ounce. Now it's over $3,000 an ounce. So the move that people are talking about has partially occurred. I think gold probably, not definitely, but probably goes not merely higher, but much higher. The reason I say that is because I think we're in for 10 years of deteriorating purchasing power of the US dollar. In the decade of the 1970s, according to the Office of Management and Budget, the purchasing power of the US dollar declined by 75%. I think as a consequence of politics, the debt and the deficits, that we're in for another 10-year period that's similar. Older viewers like myself will recall that during that same period of the 1970s, when the purchasing power of the United States dollar declined by 75%, the gold price went up 30-fold. I'm not suggesting to you that the gold price rises 30-fold from here. I'm just suggesting that the direction of the gold price over the next 10 years will resemble the direction of the gold price in the period of the 1970s for the same reason, the deterioration of the purchasing power of the US dollar. I think it's important for people to note that. I think, too, that the discussions that we've had here in the Rule Classroom about the fact that gold bull markets operate over time in similar fashions, which is to say, the move in the metal precedes the move in the stocks. And when the stocks move, the best ones move first, has played out. We've had a great 12 months for the biggest and the best of the gold producers, names like Agnico Eagle and Silver Wheaton, both, by the way, sponsors of the 2025 Rule Natural Resources Symposium in Boca Raton, Florida. But I think now we're in a period where leadership begins to change. I think the big ones will continue to do well, but I think the ones that have lagged a bit, multi-asset producers that haven't performed, names like Newmont and Barrick, single asset producers, I think those names either begin to work in the market, or if they don't, they'll be taken over by names that have worked in the market. Remember, higher share prices equates to lower cost of capital. Lower cost of capital is a definable competitive advantage. If the valuation arbitrage in the market doesn't get taken out by investors, it will get taken out by mergers and acquisition. The second thing I'd like to talk about, Steve, before we get to question and answer, was your own postings at your own site about the relative strength in the natural gas price. You'll note that we have been talking about that, Steve, both in your show when you and I were on together, but also in the Rule Classroom. The cure for low prices is always low prices. Billions of dollars are being spent every month to close the BTU price gap between natural gas and oil in this country, and the price of natural gas in the United States and Canada relative to the price of natural gas in Europe and in the Far East. And those investments are beginning to bear fruit. I think that on a BTU equivalent basis, natural gas is still cheap relative to oil. I think oil is cheap in its own right. And I think the continued disparity in BTU pricing for natural gas between Asian markets, European markets, and the sources in the United States and Canada is still cheap. So I think this continues. I pointed out because it is at once an investment opportunity still and a lesson to be learned. At the time that we talked about natural gas pricing, Steve, on your own show and here at the Rule Classroom, natural gas was hated. People understood the thesis, but they didn't want to buy it because it hadn't performed. Just as scheduled, the cure for low prices was low prices, and the markets are firming up and people are making money. Which brings me to the third topic. My favorite manic depressive trade of all is probably uranium. People are absolutely, positively disgusted with uranium. The spot price of uranium, by the way, in increasing irrelevancy, has declined because the physical pace of Japanese restarts has declined. The inventory held for sale in Japan that I had assumed was begun to be held for inventory is in fact being loaned, which is to say the Japanese, knowing that they'll need it for 3 or 4 years from now, rather than selling it, are lending it to producers who can sell it now and who can replace it later. These same producers are vending that borrowed uranium into term contracts that are priced above spot price, and they're arbitraging the difference. The consequence of that is unnerving to uranium speculators who don't understand the nature of the uranium market. People who were calling, Steve, you and I both idiots for urging caution in the uranium market 12 months ago are now despairing and selling their uranium stocks at prices fully 50% lower than they were at the point in time that we were having those discussions urging caution. Now, I think the recommendation needs to reverse itself. This is the time to begin to look at select uranium juniors that have reserves and resources that could be put into production at the term market prices now and are smart enough to secure term contracts, which facilitate these things to come into production. Rather than being the time to run away from the uranium market in despair, this is the time to get into the uranium market. Perhaps 2 years from now, Steve, you and I will be urging caution again when the share prices are 200% higher today. And likely, if we do, the same group of people that are despairing of the low uranium prices today will think that we're idiots for selling high. At any rate, there are lessons to this. In natural resource investing, you are either a contrarian, like buying natural gas a year and a half or 2 years ago, or selling uranium a year and a half ago, or you're a victim. The choice is yours. The point of the Rule Classroom is to assist you in being better at making your brain override your heart. Those are my comments so far, Steve. Oh, one more, actually. I did a very recent interview with David Stockman, which has been viewed far too few times. For those attendees who don't know who David Stockman is, he was the director of the Office of Management and Budget in the first Reagan administration. That's a different way of saying he was the inventor of the Department of Government Efficiency. He was charged with implementing the Reagan Revolution, something that he was unsuccessful in doing. The Reagan Revolution, the revolution for smaller government, was derailed by Congress, including a Republican Congress, in less than 6 months. David wrote a wonderful book called The Triumph of Politics, which discusses how the will of the voters was thwarted in Congress and why it will likely be thwarted again. He has written a very recent book, very topical for today, called How to Cut $2 Trillion Out of the Federal Budget. I urge anybody who is listening to this discussion today to listen to my interview with David Stockman. I think he's the most important commentator on the American budget and on American politics as it relates to fiscal matters that is available. I want everybody to know, of course, in a commercial sense, that he will be the featured keynote speaker at the Rule Natural Resources Investment Symposium in Boca Raton, Florida, July 7 through 11, which you can attend live in person or via live stream in the comfort and convenience of your own home. Whether or not you attend the investment symposium, and of course I would prefer that you did, I urge you to listen to the recent interview that I did with David Stockman talking about today's circumstance. This interview, of course, in support of the Natural Resources Investment Symposium.
Okay, let me see if I can. So gold, you see, is it's at 3,000, but that's a nominal value. It's going to continue to go up. Natural gas, some of that arbitrage has been closed. We're pounding the table when it was $1.50. Now it's $4, but there's still quite an arbitrage over in Rotterdam where they're paying 13. So there's still room for that to run. Uranium is actually approaching cheap again. And now instead of, we sold when it was north of $100 spot price. Now we're getting down into the low 60s. It's becoming interesting. And David Stockman, I'm about 15 or 20% of the way through his book. It's really good. And my God, there are some serious parallels between what we have going on today and back then. So I'd recommend the book as well. It's a very, very good read.
David really is an American hero. And I think that people in particular owe it to themselves and future generations of Americans to read both of these books and to think about the implications for our country of not paying attention to what Mr. Stockman says. And by the way, he's a bit more optimistic about it than I, frankly, which is interesting given that his knowledge is deeper. The idea that as a people, we owe $36 trillion on balance sheet and $100 trillion in the net present value of obligations, which is to say we owed $136 trillion at the federal level before state and local debt, is difficult to me. It's difficult to me, particularly when the IRS suggests that the private net worth of all Americans combined is $141 trillion. In other words, we're worth 141. We owe 130 net present value. And the 130, if you combine off-balance sheet and on-balance sheet obligations, grows by $4 trillion a year. Understand that the delta between what we have and what we owe on a net present value basis is only $11 trillion, which is to say 3 years of stupidity.
Yep. Okay, let's get into some of the questions here. We've got Kristen and Conrad both want to know about Meg Energy. Do you have any comments on Meg Energy?
I don't have enough comments on Meg Energy to suggest that my information would be better than the markets. So no.
Okay. All right. And how about Felix wants to know about Centaurus Metals, their project down in Brazil. How are they looking? They were a sponsor at the last symposium.
Yeah,
what do you think? I
love Centaurus, and the market hates them. The market hates nickel, hates platinum and palladium. This is a ultramafic deposit. This is a deposit that will clearly be a tier 1 deposit, which is to say well over $10 billion in situ recoverable reserves and resources, probably more like $20 billion in situ values. It will, at least among sulfidic nickel producers, also easily be in the lowest cost quartile worldwide, and at prices, admittedly a little above today's prices, but prices at which the sulfidic nickel market works, they will generate returns on capital employed that will be in the best quartile. So I love it. Will it work this year? I don't know. I don't know that nickel comes back this year or next year. Looking forward, Nickel is a battery story. Nickel is a steel story. Nickel is a story about the material progress of humankind. Could a recession set it back? Absolutely. What I've learned in my life is not to worry so much about recessions if what you are talking about is 5-year or 10-year investments in deposits that are best in class, in deposits that will produce for 3 decades or 4 decades, deposits that must be owned by major mining companies.
Okay. Adam has an interesting question. He says, can you talk about your good old mate, Ned Goodman, and what did you learn from him what did you learn from Ned?
Oh boy, that would be the subject of a whole call. For those who don't know who Ned Goodman is, he was one of the deans of Canadian natural resource investing and a very important mentor and friend of mine. I'm not sure why he spent so much time with me when I was young. I suspect my energy attracted me to him. But he built the dynamic group of mutual funds. He built a money management firm, Butel Goodman, and he built Dundee Corp. One of my fondest memories as a stockbroker was when his small merchant bank, Dundee Corp, was spun out of Corona when Corona itself was purchased by, I believe, Homestake. If my memory serves me correctly, the shares of Dundee Corp debuted on the Toronto Stock Exchange at about 80 cents, and they fell to 60. Many people had owned Corona as a producer, not because of Ned Goodman's investment prowess. And I was fortunate enough to scoop up a lot of stock for myself and my clients in the period 80 down to 60 and 60 back up to $1. Within 5 years, if my memory serves me correctly, that was a $40 stock. Ned Goodman was a wonderful human being. He was very good at spotting the value in other human beings and assisting them in fulfilling their dreams and growing their enterprises. He did that himself. He was an important part of the discoveries that made by Murray Pezim in northern British Columbia, and he was an important financier of the famous Hemlo discoveries in Alberta. In addition, he was a very astute, very good oil and gas investor, and by the way, an all-around good guy. I today am a shareholder of the successor to Dundee Bancorp, now called Dundee Corp, ably run by Ned's son, Jonathan Goodman, who I'm delighted to say has been a friend and colleague of mine now for 30 years. With regards to Ned, of course, rest in peace.
Okay, I wish I could have met him. Sounds like a really cool guy. Brian has a question on uranium. He says, it feels to me that uranium producers versus uranium prospectors have the catbird seat right now. If so, how do we identify the good ones versus the pretenders? I'm thinking of a comparison between Boss Energy and Encore as an example.
I think you're coming too far down the quality trail. The guys who are in the catbird seat are Cameco. The people who have a balance sheet that is big enough that they can borrow uranium from financial interests and use it to satisfy long-term contracts. The term contracts that people are entering into have near-term prices between $75 or $80. And the idea that you could borrow uranium at spot, 62 or 63, for a 0.5% standby fee and a 3% interest charge, and then pay back uranium 3 years from now or 4 years from now, while pocketing the difference between 63, 64, and 75 or 77 is superb. It's only Cameco and Kazatomprom that have the balance sheets and the reserve base to do it. When you come as far down as Boss and Encore, what you have to do is you need to look at the deliverability of their reserves, and you have to look at the deliverability through the views of an off-taker. Specifically, the company has to have the ability, but also the willingness to enter into term contracts so that you lock in specified prices and volumes over time. The recent production difficulties that Encore has experienced likely gets in the way of their ability to secure sufficient term contracts that the valuation arbitrage that I've talked about in the Rule classroom, and much more specifically at the Uranium Boot Camp, would realize.
Okay. Zahara has a question. says, from a speculation perspective, how should one think about junior miners versus junior mid-sized royalty companies while creating a portfolio?
In terms of risk, the royal companies are much less risk. Remember that with royalty companies, you don't have to worry about production costs. You don't have to worry about capital costs. Perversely, in a rip-roaring bull market, the companies that are the least efficient financially will do the best in the market. That makes perfect sense. If you are a royalty company and your royalty payment or your stream payment, let's use an extreme example, is $100 an ounce. When gold is selling for $3,000 an ounce, you have a $2,900 margin. If you're a junior producer and you're producing gold for $2,000 an ounce and selling it for $3 an ounce, you have a $1,000 margin. If the gold price goes up $1,000, the royalty company's margin has increased by 40%, while the inefficient producer's margin has increased by 100%. What I would prefer to do is give up some of the optionality of the upside personally in return for giving up almost all of the operational efficiency risk in a bad market. So I personally would shade, and perhaps it has to do with the fact that I'm 72 years of age, I personally would shade my portfolio to the royalty and streaming side rather than to the junior producers, understanding that you're giving up part of the upside in a raging bull market.
Yeah, Franco Nevada, last I checked, their market cap was like 30 billion, and I think they had 40 employees. So it's a lot of room there. Okay, David wants to know about Chakana Copper. Do you see it could ever come back? He says, I'm really in the red, but I see some activity from time to time.
If you give me the word ever or could, the answer is yes. Of course, those are very promiscuous words. I bought Chakana Copper because very high quality people and a wonderful exploration project, and an exploration project that had 3 different theses that could become true. They have tested 2 of the 3, and thus far, at least, it hasn't come true. In a situation like this, normally, when my reason to own the stock goes away, the stock has to go away. I was rather greedy in the way I bit, and my position in stock is too large to exit efficiently. And so I'm in effect stuck in Chakana. It is still a good exploration project, but the truth is when the initial exploration has failed, it's usually a harbinger. The truth is that nobody drills their worst ideas first. They drill their best ideas first. And somebody will need to rethink that project pretty extensively, and the company will need to be recapitalized. If I had a smaller position, I would be an ex-shareholder. Okay. All right.
Tillman wants to know, any thoughts on Aya? Has the ranking changed? What is it now?
We have Aya as a 5. The only reason that it fell from 4 to 5 is simply because the price doubled. Aya is extremely well run. They have extremely good local social license. And I think they have lots of production upside. They're scheduled to double production within 18 months, and lots and lots and lots of exploration upside. If we get a cooperative silver market, which I am favorably inclined towards, at least in the next 2 years, I think the upside to surprises, the surprises in Aya are to the upside. I would comment, however, it's nowhere near as cheap as it was when we first started interviewing them in the Rule classroom. So some of the stupid undervaluation is gone, and they always should have enjoyed a premium, given the extraordinary track record of their senior management in African mining.
Okay. Alan has a question on the difference between a 4 ranking versus a 5. So 5 is fairly valued, 4 is approaching slightly cheap. Is it?
Yeah. Now, I own a lot of 5s because I don't give a lot of value to icing on the cake. My rankings are all about the difference between enterprise value and net present value, but they're not always very forward thinking. Which is to say, if I see a great big target that won't be tested for 2 years, I don't give them much net present value for an untested big target. My rankings are by nature conservative, and it's worth noting that most of the companies that we don't follow would probably be accorded 7s, 8s, or 9s. There's just no point in spending 6 or 7 hours on a company that you don't think has any investment merits whatsoever. So the fact that a company is ranked means relative to others, it's probably a fairly good company. As I say, I own lots of 5s and I own a couple of 6s. I own the 6s because I think that there are factors internal to the company that will cause me to raise my ranking later. But I don't want to inflict that aggressive thinking on people who rely on the rankings and are willing and able to do less work than I.
Okay. Mark has a question on coal. He says, Rick's thoughts on Ecora's strategy of transitioning from their coal royalty to producing construction and development stage base metal and other energy transition mineral royalties.
I think it's a mistake. I think it has been a mistake, but they did it. And the truth is that their royalty portfolio is, I believe, selling at a substantial discount to what it could be liquidated for. Ecora shareholders will note, too, that on the Australian coal royalties, the producers have moved, for the most part, out of the portion of the leases that are covered by the royalties. We expect in 2 years some renewed increase in the coal royalty. But for the most part, what you're looking for in Ecora now in terms of growth is royalties on assets that were acquired with the free cash flow from coal.
Okay. And David wants to know, he's asking about Adriatic Metals. Any comments and current rating?
I have Adriatic at a 5. When they achieve run rate capacity in terms of recovery and in terms of mining, I likely will upgrade them to a 4. The market has done them no favors whatsoever, partially because they ran into political difficulties in Bosnia, difficulties which I understand have been resolved. Now they need to shake out the operations. It's not uncommon for a company to achieve what's called economic completion, which is to say the conditions precedent for the rollover of the construction loan into a permanent loan. And that often happens before achieving nameplate capacity. In terms of this operation, they still need to shake in both the underground mining operation and, of course, the metallurgical and mill operation. Shareholders will remember that there are a couple of product streams here, both base metals, predominantly zinc, and also precious metals, predominantly silver. At today's commodity prices, this is primarily a silver producer. What I like about it is that these volcanogenic massive sulfide deposits usually occur in clusters. I think it's arguable that Adriatic has discovered either 2 or 3 distinct pods. And my suspicion is that over the next while, reserves probably double.
That would have a positive effect on share price.
I suspect it would.
Yeah. Okay. Patrick says, hi, Rick and Steve. Been a lot of talk about the natural gas producers, but are there any drill service companies an investor, not a speculator, should be looking at, in your opinion?
I'm laughing because although for 40 years I've been a pretty good oil and gas investor, I have been a tolerable at best investor in the service companies. I think about them a lot, but given my track record over 40 years, I'm nervous about sharing my beliefs, or rather my misfortune, with my followers. I have found in terms of the service companies, if I stick to Halliburton and Schlumberger, that is to say the top of the pack, I do okay. And if I get too cute, come in below, I usually punish myself, and I'd prefer not to punish my listeners in addition.
Okay, so play the beta with those two and call it a day. All right. And Tia wants to know, what are your thoughts on GoGold Resources? I'm going to a presentation they're making tomorrow, so I'm wondering if there's any issues that may not be clear.
I think the issues around GoGold are really issues of timing and issues of Mexican politics. GoGold is going to, they've done, I think, a reasonably good job in terms of getting community affirmation. But federal politics in Mexico is, as much as they can get away with, anti-mining. What the new president of Mexico has said is that she will support mining in jurisdictions where the local citizenry is solidly in favor of it. In particular, because GoGold's deposit will be exploited both by way of open pit mining, which she does not like at all, and underground mining, support at the federal level will be absolutely contingent on support at the local level. If you move away from political risk, I think most of the risk in GoGold is gone. The exploration is becoming predictive, which is to say that the geologists understand the nature of the ore body enough that when they propose a thesis and test it by drilling, the drilling validates the thesis. This is a string of pearls deposit, which is to say it isn't one deposit, but rather a cluster of deposits, and deposits of various types, which is important. It is obvious that there was more than one mineralizing event, more than one emplacement of fluids that make rock valuable. It's precisely this set of circumstance, different deposit types in one locale, that has the hallmarks of what could be both a big and a rich deposit. Note in this answer, I am a GoGold shareholder. Note that your risks are not technical, but rather political.
Political risk. Okay. What will Claudia do? Josh wants to know, he says, what does Rick think about Atex Resources' latest drill results? 30 meters of 4.4% copper equivalent is pretty sweet.
It is pretty sweet. It's particularly sweet in context, which is to say they've drawn some very broad intervals of high quality but lower grade material. The idea that now they are coming to understand, we hope, the deposit enough that they can find the sweet spots. They can find areas that vary positively from the overall grade, establishing starter pits, which allow the quicker payback of capital, is very, very, very important. You will note that what I described as lower grade was already by global open pit standards pretty high. If my memory serves me correctly, they had a lot of 0.8% hit. And the global median produced grade worldwide is about 0.45 or 0.5%. So even their low grade is averaging, if my memory serves me correctly, 50% above the global standard for mining. These 4% hits, if you think about the fact that the average mine grade worldwide is less than 0.5%, are particularly attractive, albeit somewhat deeper. When I say starter pit, they'll have to go down to get this stuff, but they'll certainly have an excuse.
Okay. Rajiv wants to know, any opinion on Westdome?
I don't have enough of an opinion that I think that my opinion matters. This is not a gigantic deposit. It's a deposit that generates a lot of cash. It is in Eastern Canada, which is the most over-followed piece of real estate in the world. And I have never really found it in my interest to spend 2 weeks understanding Westdome when there are 30 or 40 analysts in Toronto and Montreal who will always know it better than I.
Okay. Tough competition. Patrick wants to know, as you have mentioned, I think he's saying Ecora Resources, I believe, ECOR,
Yep.
is a great development portfolio, or has a great development portfolio. With Voisey's Bay underground ramping up, two would like to see at least 1 to 2 of their key assets come online to replace Kestrel. What do you think the probability of this happening by, say, 2030 is? I'm thinking Santo Domingo, West Musgrave, and Pai, for example.
I think the probability that they replace the Kestrel cash flow before 2030 is very, very high. The gentleman suggests the high copper deposit in Botswana, which I know well and like a lot. The extension of the Voisey's Bay ovoid underground, Santo Domingo. As the gentleman points out, this is a high-grade development portfolio. What attracts me the most is I've gone through the portfolio on an informal basis with Ecora's competitors in the royalty and streaming space, and tried to get a sort of a thumbnail understanding of what the what the portfolio would liquidate for. And I believe that if Ecora was sold today, it would sell, in other words, liquidate at a substantial premium than the market price. What I have found is if there is an asset suite that attracts intelligent buyers that is selling at a discount to tangible value, that discount either gets arbitraged away in the market or a transaction occurs. And I'm okay with either of those.
Either one, you make money. David wants to know, is Rick liking Paladin for uranium right now?
I am liking Paladin. I think the combination of Paladin with Fission, although it mystifies me, is attractive. I think Paladin is probably unique among the developers in their ability, I don't know about their willingness, but rather in their ability to finance the development of 2 uranium mines, hopefully sequentially, not together, utilizing off-balance sheet financing facilitated by offtake contracts. I also believe that Paladin's takeover of Fission may allow Paladin to make a deal with the Australian-based owners and managers of the next-door deposit, NextGen. These deposits in the western part of the Athabasca Basin are very remote and should be developed together. The Fission management team and the NextGen management team appeared to have personal differences, and my nervousness was always that somebody would do something really profoundly stupid and build duplicate overheads, duplicate infrastructure out there. I think the probability is that Paladin will be able to contribute the Fission assets and become minority shareholders in the development of that Western Athabasca project as one project. And I think that will be a multi-decade tier 1 deposit, perhaps the best undeveloped uranium deposit on the planet.
Okay. Josh wants to know, he's asking about one of the Osiskos. He says, what's Rick's ranking for Osisko development? Does he think, what do you think of their Cariboo gold project?
I have it as a 6. It's very difficult for me to tie Cariboo together underground. There's a huge gold endowment there. And Sean Rosen is nothing if not persistent. My belief is over time, he'll put enough holes into that thing that I will understand how the ore body works. But at present, I don't.
Okay. Josh wants to know, do you own any K2 gold? And does he think they will get their phase 2 drilling permits for the Mojave project in California?
I do not own K2, and I am not a fan of California gold mines. The worst experience with political risk that I've ever enjoyed, if that's the right phrase, in my career, was being part of financing the Viceroy discovery in 1980. Sadly, 7 miles on the wrong side of the California-Nevada line. If my memory serves me well, we wasted 13 years in permitting. And by the way, spent $16 million on bribes. Not the efficient kind of bribes like in the Congo, but rather campaign contributions, deeds of property in lieu. If you think about a 13-year delay in permitting, and you think about what 13 years does to the net present value of a deposit at, say, a 5% discount rate, that suggests that the California legislature wasted or stole $650 million in net present value from shareholders while exacting $16 million in bribes. If it sounds like I'm not a fan of California mining, you heard it correctly.
I asked Ross about that, and he said, permitting in California, forget it. But if it's already permitted, then you can actually look at it.
Well, that's a good point. If somebody else has, as Ross has, suffered through the permitting regime at Castle Mountain, which he, I think, now operates, and Mesquite, which he certainly operates, that's much more doable. If you go back earlier in my career, one of my real early successes was Glamis. And we operated successfully, albeit in a different regulatory environment, for 18 or 20 years. The mineralized endowment of Southeast California, it's part of the Basin and Range. There's a great gold endowment there. The problem isn't the deposits. The problem is the legislature.
Okay. Gene wants to know, hey, Rick, the concern on uranium is that the market may actually move to begin in balance in a couple of years rather than being in deficit with Kazatomprom ramp-ups, among others. This would be a change to the dynamics. Shouldn't this be a key concern to the buy case here?
I think the problem isn't 2 or 3 years from now. It's right now. The problem right now is that we had anticipated that the actual pace of Japanese restarts, rather than the political pace of Japanese restarts, would be higher. The consequence of that is that there's between 10 and 15 million pounds of inventory, which has been offered up in the loan market to Kazatomprom and Cameco, among others. I am reasonably confident that Kazatomprom and Cameco, between them, will be able to solve over 2 or 3 years the ramp-up difficulties at Inkai, which have really impacted the uranium price. But I am also confident that at that point in time, when the Japanese restart program goes from being political to physical, that the product that's being loaned out today as it's repaid will become fuel supply as opposed to held for sale. So I have a more bullish viewpoint on uranium inventories. I would suggest strongly that anybody listening to this call who is a member of the Rule Classroom pay attention to the different point of view, which is presented eloquently by Asymmetric Research, who are themselves members of the Rule Classroom and publish their own research on a wide variety of natural resource related topics, including natural gas and uranium, and have a very different view of supply than I do. So I would urge people in the Rule Classroom to get their money and time's worth by paying attention to both points of view.
Yeah, I'll give a shout out to him as well. I read his Substack. It's really good. And I think it's important to also read the other guy's point of view when you're placing a bet and be able to argue it. Because if you can't, then
the guy's point of view when it's intelligent. You know, I get all kinds of other points of view on places like X, and they're written by people who couldn't construct a comic strip.
Yeah, yeah. Otherwise, you may be finding yourself in an echo chamber, and that's not good for making money. Okay, now Zoltz wants to know. He says, does Rick like oil tankers? He's thinking tourmaline. He says it's at a discount right now.
Did he say oil tankers? I didn't understand the question.
You know what? I'm sorry. Yeah, that was two separate ones. Okay. First one is, does he like oil tankers?
Yes. I don't know enough about shipping stocks to recommend them specifically. I am a client of a money management firm that invests specifically in tankers and shipping. So I like the sector, but I don't want to inflict my picks on my listeners. I like the sector as a sector because it's deeply out of favor and it's generating a lot of free cash, but I don't want to make picks. As to tourmaline, I have a lot of tourmaline. A bad thing is happening to tourmaline right now. A person who is, from my point of view, a sinister person has been selected as opposed to elected to be the next Prime Minister of Canada.
Mark Carney.
He is to be charitable, no friend of the oil industry. So people who consider the whole oil and gas space need to consider it, first of all, as a contrarian investment, because the infrastructure investments for the transmission of Canadian oil and gas need to have been made 10 years ago and weren't. And the current prime minister, although he has temporarily scrapped the carbon tax, did so under duress. He was the author of it, and is a public and vociferous opponent of Canadian oil and gas.
How do you feel about the Birchcliff, Peyto, Tourmaline bets now? Maybe Canadian Natural Resources. Is this really bad for those companies now that Carney's going to be in?
It absolutely could be bad. I'm attracted to them because I think the market reflects that. These companies are cheap. If you think about Birchcliff and Peyto in particular, they were making money in a dollar gas market. Yeah. Basically selling the byproduct gas from the condensate and oil production. If you think about the cash that they could be making in a $4 market, truly an absurd amount of cash. In the case of both Peyto and Birchcliff, they have been returning money to shareholders as opposed to drilling their inventory. And they have a vast inventory of tier one locations. When the market gives them incentive to increase their production, they're going to be able to increase that production in a very dramatic fashion.
Okay. Courtney. Hey, Rick, I've been hearing a lot about Sky Harbor Resources, who got funded by Denison Mines. I'm wondering what you think of Sky Harbor Resources, and have you looked into them?
I am not a shareholder of Sky Harbor. I have been from time to time. I have a fondness for the young well, he's no longer so young. I think it was young 15 years ago. He's no longer so young. The CEO of Sky Harbor, who basically grew up in the exploration business. I've known him long enough that I did business with his dad. But I don't own it, nor do I own Canalaska, the two exploration stage project generators in the uranium business. I don't have anything against them. It's just that the more senior part of the uranium space, including the Grand Dam, Cameco, are so cheap that I don't need to take exploration risk.
Okay. Space Keys. I like that name. What does Rick think of Comstock Resources? They've had a nice run the last 6 months.
They have. I'm not a Comstock shareholder because, again, I can't tie the deposit together. I like the silver space, but for me, it's easier for me to understand Vizsla and Abra, and if I go a little higher up the quality trail, Aya Silver. So I don't own Comstock. It's certainly a name that will attract American investors because the Comstock was one of two iconic American silver producers.
Okay. Ashley says Gold Royalty Corporation dropped a lot today. What does Rick think about it?
I paid no attention. I apologize. I have no good answer.
Okay. Looks like they came out with one of their reports, and the market gave it a discount of about 15% today. Zahara says, how would you rank the following three relative to each other, excluding their size, say from 7 to 10 year perspective? Agnico Eagle, Equinox, and Pan American Silver.
All very different companies. This is not an apples to apples question. Agnico Eagle is the finest operating precious metals company on the planet. It isn't primarily a silver company and will never benefit or will no longer benefit from a silver-centric production profile, which distinguishes it from Pan American. They are achieving the best financial results by far of any operating gold and silver company available to North American investors, and they have a wonderful development pipeline. By historical standards, they are also not cheap. I own a lot of Agnico Eagle. I'm delighted to say they were a sponsor of the 2024 Boca Raton Investment Symposium, where I had the good fortune of sharing lunch with the chairman, Sean Boyd, and they will be a sponsor of the 2025 conference, so people will get a chance to visit them better. I'm a founding shareholder of Pan American Silver. I was shareholder number 2 after Ross Beatty. I have a warm spot in my heart for the company. We financed them at 50 cents with a 75-cent warrant, and within 7 years, the stock was $40 bid. They've done a good job with the acquired assets from Yamana, I don't think they're done with that. I don't think they're done with the dispositions, although they're doing a fairly good job with dispositions so far. But there's still room to go to optimize their holding. The upside in Pan American, from my point of view, are the non-producing assets in Guatemala that they acquired from Tahoe, formerly producing, but shut in as a consequence of politics in Guatemala. And a 500 million ounce high-grade undeveloped silver deposit in Argentina, stalled by Argentine state politics. Our hope is that the change in the direction of Argentine federal politics and a change in direction in Guatemalan politics will allow Pan American to put these two projects in production. If either one of them came into production, they would double Pan American silver production. And you get both of these deposits, I think, for free in Pan American. The story with Equinox is different again. In the very near term, I think that the Equinox share price will be challenged because of the recent takeover, or at least attempted takeover of Calibre. Often in takeovers, the immediate reaction in the market is for the shares to trade off, as people who were part of the acquired company are either disappointed with the premium or lack of premium that they received, or if they were attracted to it, short the shares of the acquirer so as to lock in the premium for the shares that they're about to receive. So I expect in the near term, Equinox may trade lower. Longer term, I believe this to be an accretive acquisition. Longer term, too, I believe that Equinox will be able to assist in the on-time, on-budget, successful completion of Calibre's construction project in Eastern Canada, even while Equinox's own Canadian project, the Hard Rock deposit, comes into economic production. I would note, too, that this is part of Ross Beatty's game plan. You buy companies to build a bigger hole so that you increase trading liquidity and increase, as a consequence of scale, your access to passive fund buying through the ETFs. As you acquire these companies, you sell off the smaller, less consequential assets to fund further acquisitions of more high-quality assets. This is the way he built the original Equinox. This is the way he built Pan American. This is the way he built Lumina Copper. This is part of his game plan. Likely at 75, 76 years of age, however old he is, this is his swan song, and I'm delighted to be part of it.
I own all three as well. Agnico on a zero-cost basis, I've sold enough to where, man, it's had a nice run the last year. That was amazing.
And a deserved run. And it's still, it's no longer cheap.
Yeah.
But if you look at the pipeline and you look at the cash generation, it's also not expensive.
Yeah. Okay, we're getting close to the hour here. A couple of people, Patrick and Kristen, want to know about Athabasca Oil.
I don't own Athabasca Oil. It's well run. I like what they do. I don't discourage owning it. It's just it didn't make my Canadian oil cut. I had a basket of money that I felt like I could allocate to Canadian production, and I don't own Athabasca, although I don't discourage other people from buying it.
Okay, and Kristen wants to know about Hercules Metals.
Hercules is an exploration stock. Very interesting discovery, keying in some small high-grade silver veins to find the source of the veins, and banging into a pretty good-sized porphyry, copper, gold, silver. Still very much an exploration play. While this is not for the faint of heart, really, truly not for the faint of heart, because it is an exploration play. It's something that I have to admit I own. The core hole from the remobilized part, the upper part of the porphyry that was shown to me from Hercules was really, truly geoporn. It was some of the best looking porphyry rock I've ever seen in my life. And I just had to buy it. That sort of sickness, I hope I don't inflict on my listeners. But if you have the experience and the courage to be an exploration shareholder, you need to look at Hercules. It has the potential. I'm not saying it's a profound discovery. I'm not. But it has the potential to be a profound discovery. Now, There will be problems. Idaho used to be mining country. Idaho is now a place in small towns where they spell shop SHOPPE, which means that if they do make a profound discovery, there will be a long time permitting it, and people need to understand that.
Oh, what's happened recently with Idaho?
Nothing recently. I'm tempted to say too many people moved there from California and Washington. And as a consequence, what was once a rational voting base became less so.
Okay. Yeah. They did. I know during the Charlie 19er time, they increased their population by 2%. Right. So a lot of those were Californians.
Yeah. Granted, that was only 20 people, but
yeah. Yeah, my folks live up there. We got property up there, so I'm pretty familiar with Idaho, but I didn't know that. Okay. What do we got here? Nicholas says, what about Africa Oil and the closed deal with Prime Oil and the apparent 10% dividend?
I'm a large Africa Oil shareholder. I'm a founding Africa Oil shareholder, among other things. I have no basis in Africa Oil. I've sold enough long since that my shareholding is for free. Consolidating the prime interest is something that had to happen. It was owned by private equity. Some of the private equity limited partners have been selling. There's been consistent selling in Africa Oil, which is good. They consolidated an interest in the third largest offshore operator in Nigeria, one where there has been no concerted exploration effort for 7 years because they were paying off the acquisition debt. There's a lot of exploration upside in Nigeria. Meanwhile, the existing production is selling at about half my estimate of its net present value. The new set of shareholders and the Lundin family have committed to the fact that they will substantially increase returns to shareholders, both by way of buybacks and dividends beginning in 2025, this year, while also allocating sufficient capital to exploration, both in Nigeria and Namibia, to fund growth, should the drill bit be successful. The idea that a company can grow while making substantial returns to shareholders and it sells at a 50% discount to NAV is a fairly attractive combination to me. The bad news is anything can and much has gone wrong in Nigeria. That's your particular risk. Politics in Nigeria is a full contact sport, and there's nothing that suggests that that's going to change anytime soon.
Okay. How about Ecuador? Guillaume Martin. Martin says, if Noboa loses presidential election in a few weeks, are all Ecuador things like Lumina Sky? Does that look Lumina? Does it start to look shaky?
It'll really depend on the composition of the legislature in Ecuador. Ecuadorian politics are very hard for me to decipher, while Ecuadorian geology is extremely attractive. We have brought into the Rule Classroom and the Rule Investment Symposium Paul Harris, who lives in Colombia and is expert on Colombian and Ecuadorian politics. And I'm intending to debrief Paul fairly quickly about politics in both Ecuador and Colombia, perhaps at the Rule Classroom live. People who like that idea should let us know in the comment section of the Rule Classroom whether that's a conversation that I should have myself with Paul or whether people are interested enough for us to have it publicly.
Okay, everyone put your comments in here real quick. I'm getting a nudge from Albert that we need to start wrapping up here in a few minutes. Maybe we can get a couple more in here. Sharon wants to know, Rick, could you please share your opinion on First Majestic?
I don't own First Majestic, although I have in the past, and I'm very attracted to the management team. I believe they bit off more than they could chew with Jarrett Canyon, and I want to see how Jarrett works itself out. In the very near term, I think free cash flow increases because, of course, they completed the transaction, to acquire Gatos Silver. Gatos, many people will recall fell fairly precipitously because post-production, their reserve and resource statement fell fairly substantially. So it remains to be seen, given the short-term nature of the cash flow boost that First Majestic got from Gatos, whether or not First Majestic will be able to either increase the reserves and resources at Gato or use the free cash flow generated from Gatos to acquire and or expand other operations. I don't own the company right now, although I have in the past.
Okay, and wrapping up here, Mike wants to know about tin, and you could probably already guess what I'm going to ask. He's asking about Alphamin Resources. So we had a little hiccup in the DRC. Yep. The news saw a bunch of headings like military resistance and things like that, and shareholders don't particularly care for those that language.
Sure. For those listeners who don't know what we're talking about, the world's highest quality, largest tin deposit, a producer in Eastern Congo, a troubled part of a troubled country. Alphamin has been a huge success story, building a mine in the middle of nowhere among warring factions, operating a mine, shipping concentrate when every truck has $400,000 worth of concentrate, and people will murder other people for $100. It's been a truly amazing circumstance. Right now, that part of Congo, as opposed to being sort of troubled, is really troubled. Troubled from warlords, troubled from incursion by the so-called M23, backed by Rwanda, and the mine is shut down. Now, I've been through this kind of thing a lot in my life, particularly in Congo for whatever reason. And don't get me wrong, Congo's made me a lot of money because of the high value of the deposits there and the high grade of the deposits. It's going to sound silly, but that tin was probably emplaced in North Kivu 60 million years ago. And the tin doesn't care much for the agenda of the rebels or the stupidity of the government. My suspicion is that no party has the sophistication to run the mine, and no party has the balls to steal it. What you have is a circumstance that might take 2 months, might take 3 months, might take 12 months to sort itself out. And when it does, you see the restart of a mine that is truly a freak. I have used the instability around Alphamin to buy more shares that I already have. Now, you will remember, Steve, yourself directly, that at least once before, when I was really attracted to political risk, which is to say Russia, I made a fairly profound mistake. When I look back over 40 years of my willingness to step in and sometimes step in big in the face of political risk around tier one assets, while I have made mistakes, on balance, it's made me an awful lot of money. Don't use money you can't afford to lose. And I'm tempted to say to people, don't even use money that would cause you any psychological trauma. The essence of wealth may well be to enhance your sense of well-being. And if you're one of those people who can't psychologically, even if you could afford physically, to lose 50% of your money, don't do this. If, by contrast, you are willing to risk 50% in hopes of making 300 or 400%, then do this. Okay.
I learned the same thing on the Russia debacle between Gazprom when I just watched.
Mercifully for me, I had 22 or 23 very good years before I had one catastrophically poor year. I'm reminded of my first big Russian adventure, which was Vostok Nafta, a Lundin vehicle in Russia that went 100 for 1.
Wow.
So what Russia did was take back some of what it gave me.
Good. Well, Rick, this was always a pleasure. I'll be seeing you next week on my show. I look forward to it. Thank you as always. This was a lot of fun. Any closing thoughts?
No, I think we've given people a lot today. I think the opening statement should refresh people's minds about why they do what we do, which is to say, in natural resources, you're going to be a contrarian or you're going to be a victim. I would ask our listeners to make what is always the best possible investment first, which is an investment in yourself. increase your education, please use the facilities available at the Rule Classroom to do that. We have hundreds of hours of lectures and, in fact, how-to symposiums there for the best price, absolutely for free. Further, the penultimate product that we sell, absolute ironclad money-back guarantee, is the Rule Natural Resources Investment Symposium. I think that symposiums have been going on for 30 years. This year will be absolutely positively the best. We get a little better every year, and we were already pretty damn good. Whether you choose to join us in person at Boca Raton, which I would prefer, or if it's inconvenient, join us from the comfort and convenience of your own home via live stream. Note two things. You will have access to the recordings of the conference for a year, and you'll need them. We're going to give you 50 hours of programming in 4 days, more than you can possibly absorb. I put on the conference, and I have to play the recordings. So whether you attend live or whether you attend via live stream, understand that we will give you critically important programming. Understand one more thing, too. We're comfortable enough with the quality of the programming that if for any reason you don't think you got your money's worth, whether you attend live or live stream, just email me. I'll give you the money back. There's no financial risk for improving your education and improving your investment performance. So we want to see you at the Natural Resources Investment Symposium. In particular, we want you to listen to the talk with David Stockman, who will talk about the $130 trillion in on-balance sheet and off-balance sheet liabilities of the federal government, and the political processes by way of which we might or might not secure the standard of living for our children and grandchildren that we ourselves have enjoyed. Very, very, very important discussion, separate and apart from the performance of your penny stock portfolio.
Awesome. I was at last year's symposium. It was the best conference I've ever been to. I already have my tickets, hotel, flights, and everything for this one. All the links will be down in the notes below for the Rule Classroom and for the symposium. Rick, always a pleasure. Thank you very much.
My pleasure. Thank you for your contributions to the classroom.
Pleasure's all on this side of the table, sir. Thank you guys for being here. Have a great rest of the day, and we will talk to you next time.